Terra Luna Classic has made a new recent low. What does that mean for the macro picture? Well, today we're going to reevaluate using the 4 secrets. We're going to look at momentum, pattern price, and time so we can make an objective decision. So if you get value from today's video, like, subscribe, hit the bell notification. Let's dive straight into Terra Luna Classic. So with Terra Luna, we're on a daily chart. And what we're looking at is pattern initially. Now, just to reevaluate, before we were taking the wave count from over here, and I wasn't really sure if we should take this into consideration. But now we've got new price information. It's showing me new, just how we need to read the markets. So we need to take this into account. In June, this moved to the upside, a wave 1, a wave 2, a wave 3, a wave 4, and a very unusual overextended wave 5, right? This is very common in commodity markets. It's pretty common in meme coins. But with Terra Luna, it might have been because of the tokenomics, because, formerly over $1 here is like 0.0004. So, people wanting to get rich. So this is a panic buying, get rich tomorrow wave. And if you're ever involved in it, especially if you got in down here, you want to be really on high alert to take profits. And that's what we said a few months ago. But now the new low is the price has gone below here, over here. So we just need to reevaluate and see what's happening. So I've taken the time into consideration, I've taken the momentum into consideration, and now what it looks like to me is a nice clean A, B, C structure. We've got the Fibonacci 78.6% retracement. That's a typical maximum correction. So what we're going to look at next is some time factors, and we're going to look at what would confirm that this low is very likely to hold. And by the way, if you want access to this chart, you can now download it for free. We can view it, and you can upload it for free as well. You'll see Terra Luna is on my list of charts. I believe it is. There it is. Terra Luna Classic. So you can get that for free as well. It's in the link below. So what we're going to do is, when you're looking at the market, so I'm just thinking for a second to get the most value across to you. When you're looking at the market, we want to get the most use out of the information that's available and use all the information all of the time. So one of the things when you got a bigger degree correction, I'm going to talk to you in this term. So this is a correction. This looks like a correction, and this looks like an impulsive wave to the upside, and then a correction. This correction should be bigger than any former correction. So now we're looking at the information since June. The former corrections is this wave 2. We're going to look at how long it took for that wave 2, but also more importantly, how long it took for this wave 4. This correction should take longer, right? And now we've got this new low. I'm taking that into consideration. So let's just quickly do a measurement. So I'm just going to do a time measurement where we're going to measure from what we're calling this wave 3 top, from this wave 4 low. And I want to project forward. It's the deep red line from this top, this line over here. That tells us, and we'll see the date, that the correction has taken longer in price and longer in time. Very important, very important. So that gives us great confidence to go. Let me just make sure you know what I mean. So this is price and then time, right? So now we can see clearly that this correction, if I just draw over it, this recent correction is longer in time, as it's gone beyond the time and clearly beyond the price as well. So it was a bigger degree correction. Hopefully that makes sense. And this is important because when we're analyzing the market, we don't want to just rely on one factor. Ideally, we want to use the 4 secrets. And what I've drawn in the bottom right-hand corner of this chart is this green box. This dark green box, what that represents is I looked at the weekly chart and the momentum is now bullish. So the higher degree time frame is bullish. So the trend is technically up, or we should look for a low to be made, right? And then on every daily bullish reversal, when the blue line goes over the red, which is happening right now, that could potentially be the new low. But we don't want to jump the gun. We don't want to jump the gun. And by the way, if you want to learn the 4 secrets, because we're talking about momentum, pattern price, and time, but how to really do it and use it in a practical fashion, you can now actually take my 4 secrets masterclass. It's your way of checking out my training. If you like it, you can onboard as one of my students, join my private Telegram group. We do weekend workshops, giving a lot of value away because I've been trading for 15 years. And there's a lot of noise in the markets, a lot of noise, a lot of news, a lot of fear, uncertainty, and doubt, a lot of FOMO, fear of missing out. And this just gives you a practical, mechanical way of trading consistently and managing your emotions and managing your risk as well. So that's free. It's in the link below. Check it out. I think you'll love it. So what we're going to look at now is I'm going to zoom into this part of the market, right? Just this part of the market here. I want to ask ourselves the question, what would be a strong indication that this low, you see I got a big question mark here, but this low has been confirmed? Well, the first signal would be price going above the most recent swing high, right? So that would be an early indication. The next stronger indication would be price going above what we're calling here a wave B. So if price goes above here, above this point, that would be a strong indication. But a stronger indication would be above here, right? That's important. The next thing I would like to see, and you want to be on high alert for, is a 5-wave structure, impulsive. So I would like to see if it takes off, ideally in a 5-wave structure. That will give us great confidence also. And then waiting for a pullback, and that could be a nice position to go long as well. Because what you really want to understand is time and time again, and it's clear around 40 to 60% of the time, not 100% of the time. Markets tend to move in 5s and 3s. And if you can spot these structures and the relationship they have to each other, wave 3s to wave 4s, wave 4s to wave 5s, etc., because there's some price ratios. I cover it in the 4 secrets, which is in the link below, the masterclass. But it's really, really powerful. So I'm going to finish on one more thing, which you want to be on high alert for, or just be aware of at least. This what we're calling a wave C, right? This over here, this wave C. Wave C's typically break down to a 5-wave structure. And here, what I can see is we've had this initial move down, a correction. It looks like a wave 1, a wave 2, a potential wave 3 over here, and then ABC of a wave 4, and then a final wave 5. That potentially could indicate to us that that is a stronger wave 5 of a wave C of a wave 2. So there's 5s and 3s. I cover it in detail in the masterclass. If you're brand new to this, everything is difficult before it's easy. That's just the nature of life. What we practice, it becomes easier. So and the reason I'm showing you this is when you get a 1, 2, 3, 4, 5, a pattern reversal signal is the price going above the wave 4. That's an early pattern reversal signal. And what I personally like to do is if we get that pattern reversal signal, and it does take some patience, so you don't have to jump the gun, is wait for the first pullback. And that is normally the safest time to buy. In fact, I'm going to cover one extra thing with you as well, just so you're aware of it. I've spoken about it before. You would have heard it if you've seen my previous content, is overbalance of price. We want to look at what has been the biggest move to the upside in this whole downward sequence. What's been the biggest move to the upside? Well, clearly this one here, right? This one here. Now, in hindsight, it looks like a correction because we got this low exceeded down here. So what we can do is also measure this to say how big was this movement. We want to see the buying behavior to be stronger than this. So in other words, the price to go make a bigger move than this direction. That's an overbalance of price. It will take out a swing high. We're looking at as a potential wave 4 of a wave C, and then have a pullback. And that could be a nice entry position as well. So hopefully that makes a lot of sense. So just to summarize with Terra Luna Classic, we want to take into consideration the early price movement in June 9th, thereabouts, that initial surge. Because back here, like if we just look at this back here and we take it in context of what it looked like at the time, right? Because when the price just shoots crazy up, then it's just panic buying. But this looks like a textbook wave 1, wave 2, wave 3, wave 4. So again, you got this a very bullish movement here. We got this correction over here. This nice movement here. This price did not close into this range, so it's a valid wave 4. So we go, let me just drag it across, and because it really extended, right? It went on for quite a while. Let's just drag it across and a bit more, drag it across and a bit more, drag it across. There we go, wave 4 here, right? If we look at the closing price, the closing peak of wave 1, you can see wave 4 did not close into that range, right? So it's a valid wave count. And so what I mean by panic buying, if we look at what happened next, let's do it like this actually. Let's do it like this. So it's just a bit easier. to do. So I'm going to do it like so, right? So a typical wave five, let me just draw the price ratios. You want to be aware of this because this is what happened. This is why you want to not have a fixed stop loss in terms of profit taking. You want to let the trend unfold. A typical wave five is more often than not 62% is normally this green line is pretty standard. 100% is actually considered the red line at the top. It's considered an overextension, like it's peaking out. And then 1.618 is well overextended. 2.618 is very unusual, very unusual. So what we would have seen here, if we just unfold the data, like right now, we jumped a bit too far ahead. Let me just let's just go back a little bit. I think this will be useful, just useful for you to see. So when you see price do this, let's just get rid of the momentum there. Like it's really shot up, right? It's really shot up. I would look at this and go, okay, it looks like we are coming towards the end of a wave five in this structure, but we don't know how far it's going to go. So you want to trail your stop loss. So when we're looking at this, we go, okay, there's a lot is very, very bullish. I think we said it at the time, said it's likely to overextend just because of the way people are talking about it. It was very, very hyped. So we can put a stop loss on a 1 bar low, right? And then the next bar was just explosive again. We go, great, let's just put our stop loss to a 1 bar low. And this is now very overextended already. This is very overextended. And then the next bar, it went there, it went there. Again, we will just be moving stop losses to 1 bar lows and swing lows. But let's just unfold the data a bit faster now. And you can see that, just boom, just crazy. But this is unusual. But what you'll hear me say and see me do time and time again is when I'm trading, I won't take profits at a fixed point. I will trail the stop loss because of these circumstances. Around 10, 20% of the time, maybe only 5% of the time like this, it will overextend. So again, let's just keep trailing the stop loss. Let's just go here. Trail the stop loss, 1 bar low. Trail the stop loss, we would have got stopped out over there. So now, that tells us a lot of information. Now we went a bit higher, but you're never going to get the top of the market. And then when we see this, I can't emphasize this enough. A lot of people get caught out. When it's just vertical like this, what you want to know is it takes a certain amount of money pumped in to cause the price to rise, and then the money runs out. And people want to take profits, especially if they got in down here, even over here, and especially down here. This is pure panic buying, fear of missing out. It's just going to be due a correction. And then what we had was, let's just unfold it so we're all on the same page. Then we had this big correction. Look, it looks just like Dogecoin. I don't know if you remember Dogecoin last year. It did something very, very similar to this. But it's just psychology playing out time and time again. So there you have it with Terra Luna Classic. I'm just going to clean this chart up because I want to save it so you have the relevant information. We don't really need this. I'll leave this one there. Again, I'm going to leave it saved so you have it like so. Bang. Terra Luna Classic. Is this wave 2 low going to hold? Well, again, if the price goes above this swing high, then that will give us a lot of confirmation that the low is likely to hold. So check out the masterclass, The 4 Secrets. We did a quick version of it today to get a real scope because we're doing applied social science, applied psychology, reading the markets. Let's finish today with a quote from my book, which you can also download free. It's in the description link. It's just really around mindset. A lot of it is around mindset, getting your thinking correct. So chapter 8 is from Henry Ford. He says, it has been my observation that most people get ahead during the time others waste. Now, we're still in the bear market, right? It's been pretty brutal since November 2021. And we're now, it's pretty much a year of a bear market. So it's been pretty tough. However, the seasons will change. And it's typical. And I think in the coming months, might be Q1, Q2 of next year, we're going to see those impulsive waves come back in. And with Terra Luna Classic, look, we got to take it with a pinch of salt that, Bitcoin is not looking bullish right now. So we want to take that into consideration. So just have tight risk management. Only afford what you can risk to lose or afford to lose. I personally risk 2% per trade. that really makes it very, very easy for me as well. So we'll keep a close eye on Terra Luna Classic, and I'll see you soon.